President Biden telling Israeli Prime Minister Netanyahu to take the win, saying that the U.S. will not participate in any counterstrike against Iran. Still, the situation remains tenuous as Israel's war cabinet has spent the morning debating its response. Joining us now on the potential risks of the conflict in the Middle East is Krishna Guha. He is Evercore ISI Vice Chairman. Krishna, it's great to have you here. Thanks so much for hopping on with us here on Yahoo Finance. First, just give us your assessment right now of what is happening and what likely you think is going to happen next.
Well, I think you see in the market action today some relief, some confidence that the risk of escalation may be coming down a bit. So why? First of all, because of the nature of the attack that Iran launched, the force package, the geographies from which they attacked, the advance warning all seemed aimed at trying to send a signal but not inflict serious damage and casualties in Israel. And on the other side, Israel's remarkable success with U.S. help in essentially neutralizing that entire assault leaves us in a situation where potentially, as Biden has suggested, Israel could just take the win and step away. The issue here, though, is that Israel has to judge whether its own deterrence capabilities require them to do some kind of retaliatory action, and if so, at what level of intensity? For instance, would they consider striking one of the bases inside the territory of Iran from which these attacks were launched? If that were to happen, and that would be against the advice of the U.S. administration, then we could yet move back into this escalation phase. So far, so good, not over yet.
How likely is that escalation, Krishna?
So I think you'd need to be sat in that Israeli war cabinet meeting in order to get a really good sense of this. I would say that my own view broadly aligns with that you see traded in the market this morning, which is the risks do seem to be moderating. Whether Israel will literally do nothing further beyond what it's already doing, including striking some Hezbollah proxies in Lebanon, or whether they feel that they have to step up, it's not a clear-cut call. I would be pleasantly surprised if Israel felt that it could move forward without doing anything. I think something is likely. The question is, can that be managed, including with U.S. pressure, in the direction of registering the required deterrence, but without escalating things further? Again, odds are, at the moment, that we're on a good track. But I think it's premature to say this thing is safe and put to bed.
Krishna, what do you think is just the baseline? Let's talk about the risk side of things. Yes, hopefully the situation does not escalate in the Middle East, but what would it be? What would it take to be the catalyst then for a larger pullback? Obviously, we saw a flight to safety in Friday's trading action. What would it take to trigger a certain reaction here in the markets this week?
Well, since the very beginning of the conflict in the Mideast with the horrific Hamas terror attack on Israel, the market's central concern, separate from what we all feel as human beings here, is really on whether this conflict escalates to include Iran or not. Because, of course, if that were to be the case, you would get a full-blown conflict between Israel and Iran. Then not only would we see much more widespread conflict, but we would also see a direct threat to the Straits of Hormuz, the oil traffic, and much else potentially if this situation got out of hand. So the Biden administration and Europeans and others have been working hard since this crisis began to try to keep it from ending in an endgame of a direct confrontation, Iran, Israel. If that were to happen, it would be a far more serious market event than anything that has happened so far, and certainly could be associated with a much more macro significant and market significant, large and sustained move in the price of oil, which right now our own energy analysts suggest has some geopolitical risk premium in it, but is more generally just supported by good fundamentals.
Well, you brought up the Strait of Hormuz, so I'm curious, beyond the oil market, is there a potential risk here to trade that investors should be pricing in? And is that risk already priced into the oil market?
So I would say when we think about trade, in non-oil commodities and traded goods. The issue is less the Strait of Hormuz itself. It's more coming back to the Red Sea. And as you and your listeners will know well, of course, Iran has already been dialing up the pressure on that front for some while now, using their proxies among the Houthi rebel group in Yemen. So Red Sea going up to the Suez for traded goods, Hormuz, of course, for energy products.
Well, then moving forward, what trade should that thinking initiate for investors who are based here in New York?
So I think, unless you're a really deep specialist in trading geopolitical risk and commodity markets, you're probably not going to be able to outsmart, the WTI or Brent price in terms of what's in or out in terms of political risks of escalation. What I would say is in terms of the general tenor, risk off Friday, risk on Monday, and investors now paying more attention to oil, both from a market but also from a macro perspective, potentially further complicating, for instance, the inflation picture, in the U.S. or Europe. The key thing to really watch is this phase of this larger crisis in the Middle East now slowly drawing to a close? Or are we seeing signs that Israel, and it's Israel really that has to decide what the next move is, that Israel feels a need to retaliate directly against Iran, in which case you should expect a further potentially more serious setback in risk appetite on the one hand, an additional and potentially more sustained upward pressure on oil on the other. That's the thing to watch.